Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, this week Arizona Mining published an initial preliminary economic assessment for the Hermosa Taylor zinc-lead silver project in Arizona. The stock is unchanged from last week. Why is the market treating the PEA like a wet blanket?
That is a very good question, Jim, because the PEA came in with very good numbers, and after-tax NPV at 8% discount rate of $1.26 billion U.S. with an internal rate of return of 42%. The CapEx came in at $457 million. These are excellent numbers. The net present value is about 3 times the CapEx. The 42% IRR is well above the threshold mine developers want to see. And the company has said we're proceeding directly to a feasibility study, and we will be initiating permitting, and we think we will be in production by 2020. This is very aggressive, and given that it's Jim Gowans who is saying this, the CEO, who has put the Red Dog into production and the Polaris zinc mine into production. This is not a bunch of smoke being blown by a bunch of House Street type promoters. So the market's lack of reaction is kind of disappointing. And when last week we talked about the wet blanket, well, the wet blanket is what often happens after an economic study is published. The stock, moves to the next stage of exploration development, and it should actually experience an increase in value. But there is something called the value trough. It is the part of the S-curve that is not very pleasing. The first part of the S-curve is when a new discovery erupts and people don't know what the limits of the new discovery is, so you often get a valuation that's as high as the project ultimately ends up being worth when it goes into production. And then as we get more and more of these numbers, we get the economic studies, the parameters, and so on, then the market settles into the waiting period and starts to discount the project because there's nothing new and exciting that's going to emerge. Now, in the case of the Hermosa Taylor project, there are still some interesting possibilities. They used a 10,000 short ton per day mining scenario, shaft-based. That's about 9,000 tons per day in the metric terms that everybody else uses except American-based projects. There is a possibility that they could develop a channel option where they are able to drive and add it into the deep ore that they wish to mine, and that would allow a greater throughput. But until that happens, the project's now going to be largely a function of the price of zinc, which is sort of stuck in this 120 to 130 per pound range. Now, what is interesting is they addressed their manganese metallurgical issue. They assigned a $13 per concentrate ton penalty to that, and they used the high treatment charges and the sort of severe payability that zinc smelters have inflicted on zinc producers for the last 30 years. In other words, very conservative. The smelters are experiencing zinc concentrate shortages, and the producers are now negotiating for better payabilities than the 85%. Copper gets between 95 and 98%. So zinc producers have been penalized severely. The 210 per ton treatment charge, there's been talk that that's being whittled down. The smelters, of course, are resisting this mightily. But the company has used the numbers from yesterday that have been the norm for a long time. So there is room for the NPV to improve if we see lower treatment charges and better payability. And of course, that would be a double whammy, because that's only going to happen because the zinc concentrate shortage worsens, which means the zinc price goes up. So for now, the project looks very good from my perspective. I've upgraded it from a good relative spec value buy to an absolute good value buy. I think the stock should be up in the $3.50 sort of level based on my rational speculation model. It's down here at 221 right now. So, but the wet blanket of the value trough, it is what it is.
Serengeti Resources published an updated PEA for its Quanica gold copper project in BC. The stock moved up somewhat when the news came out that market activity is subdued. Why the modest market reaction?
The Quanica project, when they published a PEA a number of years ago, they used higher metal prices than prevail today. The capex was the relationship between capex and the NPV was not very good. But what they have done with this new PEA, they have had some additional information from some recent drilling. But most importantly, what they did was optimize the ore schedule rather than just shoving life of mine ore into the mining plan. They went and looked very closely at where's the highest grade ore. Can we develop a mining plan where we feed the higher grade ore in during the earlier life, and that helps the net present value substantially. Now, doing this PEA, updating this PEA, was a requirement of Daewoo, the South Korean company that has now earned 5% by putting up about 1.2 million for doing this PEA, and they have the option to go to 35% by spending another 8 million, and that would be a commitment. They would be on the hook for spending all of it. The market has reacted in a sort of muted fashion because Daewoo has 90 days after the company files the technical report to make this decision. Dave Moore of Serengeti says that the technical report is well advanced. They should be able to file it in a couple of weeks, but that could mean 3 months before Daewoo makes a decision. Now obviously, since they already knew roughly that this PE kind of outcome would be delivered by the PEA, it's hard to imagine that they would take another 3 months to make up their mind. But until the market sees that there's $8 million committed, it's not going to be very excited. Now, the Serengeti PEA is an interesting contrast to the Hermosa Taylor PEA. They used base case metal prices that were slightly higher than current spot prices, whereas the Hermosa Taylor PEA used prices that were actually lower than the current spot prices. The capital cost came in at $476 million Canadian for the Quanica project, but the after-tax NPV at 7% came in at $191 million. So that's less than half the capex, and developers like to see the NPV equal or exceed the capex. And the internal rate of return was also not super high. It was about 16%, and that's okay. That's beyond the threshold. Now, if we get better gold prices, and this is now more a gold than a copper project, there is optionality upside. And in my view, I've viewed the Quanica project as something of a hybrid type of story where if all they have right now is all they will ever have, then, we need better copper and gold prices for this to really be a big winner. But this project also has exploration potential. There is the IP anomaly that I and quite a few others got quite excited about last summer, which they drilled and they did not hit what they expected. However, they realized they also didn't quite hit where the target really is. So there is a chance that one of the first things Daewoo will do when drilling resumes in the summer, assuming they go ahead, is to go and kill that IP target so that they know they're not dealing with another look-alike to the central zone.
Discovery Watch with John Kaiser will be back right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. John, one of your spec value hunter recommendations, which a year ago you demoted to a bottom fish recommendation, doubled in price this week on news of their Monroe project. Is Monroe a discovery in the making?
Monroe is potentially a new SEDEX zinc-lead discovery in that southeastern part of British Columbia, about 40 kilometers south of the Sullivan deposit, which was this fabulous 100 million ton deposit that built trail and is now depleted. The trail smelter still operates. They source concentrates from around the world. They have an enormous reclamation liability there, probably in the billions. So finding another Sullivan in that southeastern part of British Columbia is not just the holy grail for juniors who want see their stock go to the moon as a result, but also for Teck itself, which would like to have another mine so that they can keep the trail smelter going for quite a few more decades. Now, the Monroe project, it has a long history. In the early 90s, a couple juniors staked this ground, and they drilled quite a few holes. 91, 92 was sort of like a bear market period for the junior sector, but we had quite a lot of market activity. As you drill down, you look for the Sullivan time horizon, which is the part of the stratigraphic sequence when that big Sullivan smoker system deposited the Sullivan deposit. And usually when there is one smoker like this, there will be multiple others in the general basin. So everybody is always looking around if they think they're getting close, if they see the alteration, and so on. Everybody gets excited. And in the case of this Monroe project, at the time it was called Fours, they did find lead zinc mineralization, but it ended up being just sort of 75,000 tons perched higher up and never really amounted to much. Now the Least brothers took that on afterwards and spent another couple $1 million trying to find where this deposit is, and failed, and their company Citation ended up being absorbed by some Australian group which discarded the claims. And a few years ago, they were reviewing one of these big geological tomes that the Geological Survey puts out. This one was on Sullivan, and they were studying it, and they sort of observed that this obsession with the Sullivan time horizon may have been misguided, that there may have been smoker activity at different horizons in the different basins around there. So they acquired this project. They optioned it out a couple of years ago to a junior called Sonoro, which drilled a deep hole and failed to hit anything. And they had developed this theory that this north-south fault in this area is a big dividing fault, and they had gambled that the system would be to the west. They had gambled wrong, but Sonoro wanted no more of it. So they took the project back, and then their own company, Highway 50, which had tried to find a Carlin-type gold deposit in Nevada, but had failed at that effort. It was essentially a shell again. So they were able to persuade the stock exchange to let them option 50% of the Monroe project to Highway 50, and by spending $3 million over a few years. And what they reported was a hole which has intersected not a Sullivan II deposit, but the hanging wall type of horizon mineralization that sits on top of the Sullivan deposit, and they've got some lead zinc smoke in the core. It is not a true discovery hole, but they are very surprised that they have this here. They think they're in the proximity of something significant, and the stock doubled because this is the sort of sign that everybody wants in a sort of blind drilling program, where you hit something that looks like it's on the periphery of something significant, and now you have the basis for vectoring in. The target was intersected at about 700 to 800 meters length of the hole. It's probably around 600 meters by the time you account for the angle. So it is a deep deposit. It will have to be an underground mine, but if it is substantial and continuous, even a smaller version of Sullivan, this could have a high impact on the company. They have maybe $600,000-$700,000 left. Each hole costs about $120,000, so they will need to raise money. However, they have a batch of 7 million warrants at 60 cents, which expire at the end in February of next year. So they're hoping that they will be able to get those exercised. The stock at its current level is still below the exercise price, but they have enough money to go in there and drill a few more holes. They have to take a break right now for probably 6 weeks because of spring thaw and the muddy conditions. But yes, Highway 50 now deserves to be on Discovery Watch to see if Sullivan II is once again potentially making an appearance.
Discovery Watch with John Kaiser will be right back after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
John, have you come across any new emerging discoveries?
One that has caught my attention this week, and I'm embarrassed that I didn't cross my radar earlier, is N Gold Mines Limited, which has the Lac La Hache project in central British Columbia. Now, N Gold's kind of an interesting company. It has about 205 million shares, fully diluted, but it went public in 1988 with the Lac La Hache project. At the time, it was operated by Irvin Eisler, and he, for the next 20 years, explored on this project, chasing originally sort of lower grade copper-gold alkaline porphyry deposits, similar to sort of Mount Milligan. It's in the right area. It's in the Quesnel Trough, which hosts up deposits like Mount Poly, Afton, and the Highland Valley deposits. But the company was almost a lifestyle type company. It didn't deliver a resource estimate during that period, but it did not ever undergo a rollback. It had a following of people who were convinced that there was something substantial in this area. In 2011 or so, Irvin Eisler was ousted as CEO. Some new people came in. Rob Shives had been recruited as exploration VP in 2009. He led the exploration of the Spout skarn magnetite deposit, and they finally produced a resource estimate in 2012, but it was only about 23 million tons of what today is like $16 rock. Not very interesting, even from an open pittable perspective. And the company kind of stalled after that. We entered into the bear market. In 2014, David Brett, who is the son of Gil Brett, an old-timer who has been around the junior scene for many, many decades and continues to watch it from his retirement perch. His son took over as CEO, decided that they should refocus on this structurally controlled gold-enriched breccia zone they call Horizon in the southeastern part of the project, and they've been sort of beavering away at that. But in 2015, they had done a gravity survey over the Spout deposit to see if it had any sort of interesting signature, and this survey had revealed other gravity anomalies, in particular a few kilometers to the southeast, that were significantly more intense. Now, gravity measures density, relative density of the rock. And what they did was drill a hole smack in the middle of this, and they reported it on March 1st. It was about 27 meters or so of 1.5% or so copper with a decent gold and silver grades, and also a fairly high iron reflecting the magnetite. And this was a bedded skarn, and given that the anomaly was sort of 1,000 meters by 1,400 meters, and it was about at a depth somewhere between 300 and 400 meters, the realization was, wow, there is this bed of enriched mineralization. And so they have now drilled 3 more holes. The first one was a 75-meter step out, not quite as thick and not quite as mineralized, but they've drilled 2 more closer to the original hole, only 50-meter step outs, and those look very similar. So assays are, probably anywhere in the next few weeks. But what they have done is even more refined gravity surveys in this area and discovered additional, even more intense gravity anomalies. So this was a part of the property that has not seen a lot of work in the past. It's been focused elsewhere. So the potential is here for, as they really get in there and start drilling these gravity anomalies, that they put together a 1% plus reasonably continuous copper skarn deposit with decent gold and silver credits. And the stock has run to about 50 cents. That's where it's sporting now a $100 million valuation. But if this indeed is a significant new copper-enriched skarn discovery that's reasonably continues, there could be a lot of running room yet for the Lac La Hache project.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.